Good afternoon, traders. This is a live trade recap. I took 3 trades this morning right at the market open. I'm going to tell you right off the bat, they all 3 failed, but this is a perfect example of why you need to take your stop losses. The setup on this trade was beautiful. It had everything going for it. It had all the makings of an easy 2-hour trade, yet 3 trades all failed. And at least I take my stop losses. That is the number one thing you could do. If I would have continued to trade this thing, I would have lost more money because it's not like the 4th entry worked or even the 5th or the 6th. And I'll show you that on the chart. This thing would have just kept taking my money over and over again. Or if I would have held and hoped, I would be down really big right now. So let's take a look at the screener first so I could show you how the stock was picked. I always go over to my mid-cap screener and click modify, make sure those filters get applied, and then I organize the list by volume. And MMAT, that was the stock that I was trading at the open. You can see the market cap is right on the edge right now. It was quite a bit higher this morning, so it was well within my filters. Now, something I want to bring up here is that mid-cap stocks, by definition, are from 2 billion to 10 billion, I believe, and I spread these out, the boundaries out a little bit at the very beginning of this testing strategy. And today, I guess you could argue that that hurt me because this was not a $2 billion or more market capitalization stock. So this trade would have not happened had I had the boundaries within the mid-cap range. That's just something I felt was worthy of bringing up. I mean, does that mean that I should have been doing it from 2 to 10 billion all along? You could argue that. So that's something, these are things to consider when we finish this test trading and we kind of evaluate everything that happened and what we could do moving forward. So let's take a look at the trades right now and we'll see what happened. So here I am on my multi-chart page as always, and I'm putting stocks. I think MMAT was on the screen right from the beginning, and you can see that it is meeting all of my daily chart criteria. Here is the 200 MA line, and it's above it, and it's kind of just heading in the upward direction overall the past few days. So I'm trading with the trend. You know, everything looks good to me. I don't see any reason not to consider this stock. So here is the high of the previous session, 619. My strategy, my plan says that the price must break out above that level. And once it does, then I enter on the first pullback. So breaking out above that level to me proves that there is strength in the stock. It's not like it went to that 619 and bounced off. You know, if that was true resistance, it would have stopped at the 619 and it would have turned around. Maybe it would have gone to 620, 622, whatever. But you're going to see that this thing broke out pretty hard above that 619 level. So let's fast forward a little bit. Yeah, MARA was another one. And here's an example of one that just barely broke out. Who knows? Maybe this one gave a 2-hour trade. I don't know. I don't go back and check that stuff because that's just going to drive you crazy and it's going to make you break your plan eventually if you keep on showing yourself, well, if I would have picked this other stock, I would have been, you know, one and done, 2-hour trade for the day. And what's going to happen is if you get into a situation like this again in the future, you lose 3 trades, you're going to start, scrambling for other stocks looking to take trades. And before you know it, you've taken 4, 5, 6 trades for the day when you're only supposed to take 3. Whatever your max loss is, the point is it's going to make you get out of control. So here's MMAT. I've already chosen this is going to be the stock that I'm going to trade. If you watched the video from yesterday, you know that I kind of in a way, I caused myself to be distracted when I was trading the stock that I traded yesterday. It would have been a nice one and done 2-hour day turned into just a plus 1-hour day because I had to take 2 trades because the first trade was an error entry on my part because I distracted myself. So that was the point of just looking at this chart only because I'd already committed. This is the one I'm going to trade. And if it doesn't give me an entry, then I wasn't going to trade anything that day today. So here we are. You can see what I'm talking about here. This thing broke out extremely well over the previous high. That signifies lots of strength, lots of buyers interested in this. So here comes the pullback. And as long as the price doesn't get below this level, I can take a trade. So I'm waiting for the pullback to finish, which is signified by a 1-minute candle making a new high. That's how I know the pullback is finished by my definition. It doesn't mean that it's really finished. Of course, it could be a fake breakout, but you have to base your entry off of something, and it should be very well defined. So here we go. Let me just go right to the entry. So let me see where I was hovering over. I guess I was trying not to stay hovered over the candles because of what happened in the video yesterday. If you're curious about that, here you can't see the wicks very well, so that's why I moved it out of the way. Even though I don't really use the candlesticks normally, I think this was just kind of a aftershock from yesterday. I don't use what I mean is I don't use the candlesticks for my entry once I figure out the price. I mean, I do. Let me explain that. So I'm hovering over this candle. It's telling me that the high is 609. So based on that, I know that 610 is my entry. What I mean when I say I don't use the candlesticks is that once I know that information based off of the candlesticks, then I look over here at the price bubble and I wait to see 610. If I see 610, then I trigger my entry. I just find that more accurate than looking at the candlesticks and trying to judge whether or not the top broke over the previous one. When you're doing that on the fly and when you're doing that on 1 minute candles, it's easy to mess that up. So I just look at the price bubble and wait for that 610. So it's going to come, let's see, in just a moment here on this next candle. So let me fast forward a little bit. Okay, I'm going to get triggered on this candle. So again, I'm looking for 610 here on the price bubble. This is my cat. Here it comes. There it is, 610, and you can see that I've gotten triggered. And I hit my hotkeys. I got filled at 611, not bad at all, 1 cent slippage. Again, the key is to move that stop loss up in place, at least roughly. You can see I didn't have my calculator switched on yet. So move that stop loss up in place immediately. That way, if this thing flushes down, which this easily could have, this was a pretty volatile stock this morning. So yeah, get it in place and then check to see where the exact stop loss location is and fix it. And then you can use the 2R calculator, plugging in your position, your stop loss, and it gives you the 2R profit target, which you could see I have in place right now. So at this point, there's nothing for me to do in this trade, even though this is trade number 1, which normally fails for me. So I'm expecting it to fail, but honestly, in this case, I was thinking this one's got a pretty good chance of working out because, man, this is super clean price action. All the criteria are met. Everything's looking good. The volume was crazy on this stock compared to the average volume. It had extremely high volume. But again, the volume could be people selling. So, I like to use volume as an indication that the price will continue in the direction that it's going. But it doesn't have to. The volume could be majority of sellers or short sellers or something like that. So the point I'm trying to make is nothing is 100% sure. So you can't say, man, look at this setup. It's beautiful. It's got the volume. It's got to work. So that's why you got to use stop losses. Even when everything looks great, it could still fail. And that's what happened here. So first trade failed, not a big deal. I could take the second trade and still come away profitable for the day. And then my next entry is always when a 1 minute candle makes a new high. So here it is let's see, hovering over, let's see, let me just get back to that candle. Okay, right here, 608. So 609 was my ideal entry. You could see the price bubble hit 609. I hit my hotkeys. I got filled at 608 because the price was oscillating. Again, move the stop loss in place. That is key. And then figure out exactly where it should be. And use the 2R calculator to get the profit target down. So, it's a system. And when things are happening this quickly during trading, you got to have a system that you follow. It doesn't have to be the exact same one that I use, but you have to come up with some kind of system. Otherwise, you're not going to know what to do when you're under pressure. So here we go. Everything's all set. I am a lot more confident that this trade is going to work out. It's looking really strong right now. It doesn't have to break out even over the previous high that it's made for the day or the high of day. So, to me, this looks, if someone asked me, what probability on the fly, do you think that this thing is going to work out? I would say probably better than 75%. And my data shows that my second trade works out about 55% of the time. And that's including, all types of price action, but it's always the ABCD pattern. So let's see what happens with this trade. But, if I'm that confident in it, why do I have a stop loss in place? Because I'm not 100% confident. There nobody is. You can never tell that a trade is going to work out with 100% certainty. So you should always have a stop loss in place. The more confident you feel about the trade working out and the more you like the price action, the less likely you are to take a mental stop. And that is a very important point to make, because you're going to be so sure that this thing is going to work out. When it starts to go against you, you're going to be dumbfounded and you're going to be like, what the heck? What am I supposed to do here? And you're probably going to try and average down or something like that. Here I'm just adjusting the stop on my swing trade with SPXL. So let's fast forward so you can see now the trade is starting to look good again. It's looking promising, like it's going to work out. And it goes nowhere near my profit target. Comes back around and stops me out again. So that's the second trade. So now my plan and my strategy says that I can take one more trade as long as the price has not come down below point A of the ABCD pattern. It has not. So basically, the lower the price goes up until it gets to that point A and breaks it, the more likelihood there is of the trade working out, because it should be coming down toward more support. I mean, look at all of these green candles here. That's all buying power. And you have to assume that right at the open that there were some buyers that did not get filled. And then as the price comes back down, they're given more opportunities to put in their orders. So that is the whole idea of trading off of support and trading off of these pullbacks. So here comes the 1 minute candle to make a new high. Let's go back to, and I mean, if there ever was a bullish candle, it's this one that you're seeing right here before my entry. You see this long wick, and the price, it ends up closing up very high. So I think the high of this is 578 or 9. We'll see when I trigger. Okay, there we go, 578. So as soon as I see 579 on the price bubble, then that's going to be my trigger to take an entry and use my hotkeys to get in. So let's see, it's going to happen in just a moment here at 578. There's 579. You can see I triggered my hotkeys. So all the executions were really good, very fast on my part and Weeble's part. And again, move that stop loss in place right away. And then you could figure out if it's exactly where it should be. And I think it was in this case. So now I can use that 2-hour calculator and get my profit target. And now, again, if you ask me, well, what's the likelihood of this one working out, at least compared to the last two that now we know failed, I would say even higher, because this thing is not, the profit target is not asking much of this stock. All it needs is a little bit of buying to go back up to this level. Essentially, even if it's heading in a downtrend, this is just going to take a bit of retracement on the way down to hit this profit target. But again, it's not guaranteed. Nothing is. So that's why I use the stop losses. They're going to save you money in the long run, I promise you. If you're not making money trading, it's not because of your stop losses. There is another reason that you just have not found yet. If you stop using stop losses, and you're already not making money, you're going to lose even more. So that is just a guarantee. So let's take a look. All right, so here it comes down and stops me out. So nothing I can do about that. I traded my plan exactly 100% as it says. I'll give you a hint here going forward when I trade the small cap test, which is about to come up. This is, I think, these are 93 trades. So I only have 7 trades left to finish this testing strategy. So it's very likely I will finish it next week. And the week following is when I can begin my small cap testing. And one hint I can give you is that none of these trades would have been valid entries on that plan. So that plan is going to be even more strict than this plan is as far as entries that I take, the entries that I allow myself to take, because you could see here when you're trading volatile stocks, MMAT is really by definition a small cap. It's just on the higher end. And with small caps come much more volatility. And that's when your surefire setups can fail. They're less predictable. So how am I going to combat that? I'm going to make the plan make it even more strict for me to take an entry. And all I'm going to say is that there's going to be more things that have to happen on the chart before I can take an entry. And I'll explain that when we start trading that plan. So just so you know that none of these trades would have happened had I been trading this stock using my small cap trading plan. So take that for what it is. I've been trading this system now for 93 trades. It is proving profitable with the mid caps, but again, I don't think it's going to be kind of safe enough and strict enough to work on the small caps. So just giving you a little heads up of what you can expect to see once we start trading that plan. So that's it. I mean, let me know what you think about this. Let's take a look at the MMAT chart. The last time I checked it, it was still well below point A. It may have come up by now. I'm not sure. Let's just go to my single chart here and go to MMAT. Okay, it looks like it's finally gotten back up above it toward the end of the day. Oh no, this is the daily chart. Never mind. It's not anywhere. It looks like it's still below it. Yeah, it's definitely still below. We'll go to the 5-minute chart so we can get a broader view of the day. So here's where we were trading. Let's see. Let me just scale this properly. And so we're trading back here. This is the 5-minute chart, so the candles look a little different. Let me go to the 1-minute chart. Okay, here we go. So this was our first entry. Actually, our first entry was way up here. So first entry after the first pullback was right here. This is where we got stopped out. And let's see, the second entry, I believe, must have been, let's see, we got stopped out in this candle, so it must have been on that candle. And then we were stopped out again. And then the third and final entry was for the break of this candle. And we got stopped out here on this candle. Now, had we held and hoped or not used stop losses or averaged down or something else pretty silly to do like that, we would be hurting pretty bad right now because the price continued all the way down to 542. And then it continued even lower down to 519, almost $5. And finally, and that's, let's see, by 11:30, so you'd be sitting around, you know, if you had that luxury of sitting around looking at the charts and driving yourself crazy, thinking, why didn't you sell this thing earlier? And now it's only up to 547. It's still not even anywhere near point A of the ABCD pattern. So now you've held this thing all day. Of course, this is hypothetical, and you're waiting for something to happen that is not very likely to happen. Maybe it'll happen tomorrow. Maybe it'll happen in a week. Who knows? Maybe it won't. But either way, if you're a day trader, you're not supposed to hold and hope. You're not supposed to hold overnight. So, you know, if you ever plan to make any money with this long term, you got to have a plan, a strategy. You got to have rules, and you got to stick to them. Otherwise, you're going to be hurting pretty bad. I know if I was still holding this thing, I would be so mad at myself right now. And I'd probably be sick to my stomach because I've done this enough times to know better. So anyway, that's my 2 cents on that. As always, go into every single trade with a plan. Stick to it no matter what. It's always better to take a red day than to hold and hope and be even more red. If you always take your stop losses and honor your profit targets, then maybe in the long run you could be green. Take care.